You know, when you hear business and financial terms, sometimes terms can sound the same but be very, very different from each other. It can be a bit confusing, right? Let me give you an example of that. Operating income and operating cash flows. Now, those sound kind of like the same, but they're actually not. Now, a piece of it are the same, but there's a real difference between these two. And let me describe the difference between those two and the two primary reasons why they're different. So when you think about operating income, it's found on the income statement of the P&L. And the P&L is just a function of the sales or revenues you generate as a company, minus the costs it takes to operate the business day in, day out. Now, there's lots of costs associated with that. One of those costs are like the most direct costs it takes to generate sales, right? Manufacturing costs or the cost to get the products to put on the shelf. It's what they call cost of goods sold. That's a cost to run the business day in, day out. But there are also other operating costs. There are things like marketing and commissions and HR and IT and finance and legal and all those other costs. They refer to that typically as OPEX or operating costs. But you also have costs like R&D or product development. So operating income found on the P&L is just revenues, the direct costs as well as the other operating costs it takes to operate the business day in, day out. That's operating income. Now, operating cash flow is different, right? Where operating cash flow, just envision it as flows of cash in and out. Flows of cash of when a customer pays you, that's money coming in. When you pay a supplier, that's money going out. When you get money in up front, right, from the operations of the company, again, cash in. And if you have to invest in inventory and build up inventory, that's cash out. Operating cash flow is just tracking flows of cash from the operational activities of the company, where operating income does not. Operating income it shows sales and costs, but it doesn't concern itself when the money changes hands. It's what they call accrual accounting. And on the P&L, you show revenues even before you get the money, and you've got costs sitting there that may have nothing to do with cash. I know, before we get our minds blown on this, let me just drill into this just a little bit. On the P&L, remember, it's revenues or sales, costs, and what profits you have at the end. Well, let's take revenue first. When does that revenue show up? That revenue shows up when you as a company have delivered what was part of your agreement with your customer. Customer agrees, you agree to deliver value to them. When you've completed that value that you've delivered, you can now recognize that as revenues or sales on your P&L. But what if they pay you in 60 days later, right? What they call accounts receivable. What if they pay you 60 days later? When does it show up on the P&L? It shows up when you complete your part of the agreement. But 60 days later, when you finally get the money in your hands, that's when cash flow shows up. So cash flow is just monitoring money in and money out from the operations of the company. So revenues when you've completed your job and your responsibility, and the costs associated with running the business, even if it doesn't have anything to do with cash, like depreciation, where operating cash flow is just flows of cash in and out. Only when we collect the money, only when we spend the money, when we get the money from customers, when we actually spend the money to suppliers, spend the money on inventory. Cash flow, flows of cash is what it's tracking on the statement of cash flows, where the P&L and operating income doesn't consider itself with cash, but really measures revenues or sales and the cost it takes to generate those revenues. And that's what you get in operating income versus operating cash flows. One's a profit metric, one's tracking flows of cash. Hoping that was helpful for you, and good luck as you impact both operating income and operating cash flows.